the mortgage. Okay, so when they get to retirement, should you pay off your mortgage when you go into retirement or not, Ben?
It's a great question. I do appreciate you asking. So.
Yeah.
Yeah. So I, if you got your mortgage 3-4 years ago, you could be paying 3%, 4%, maybe even 5% a year, and mortgage. To me, if you look at 30, 40, 50, 60-year history of mortgages, that's still a historically extremely low rate. And as inflation continues to rise, and as the Fed continues to raise that funds rate, it's going to allow you to be able to get more money from things like CDs and fixed annuities and things that are fixed guaranteed products, where you have something that's called arbitrage, right? Where you're loaning money or you're receiving money from one area and you're paying 3%. But you can invest your money in something else and get 5%. Well, you've got a 2% difference there. Why would I pay off that 3% loan when I can get 5% on my money?
That's a good point.
Right? And typically more over time if you're willing to take a little bit more risk, but depending on what your goals are, I'm not a big fan of somebody just paying off the mortgage. And also, by the way, most people as they approach retirement, they're in the second half of that mortgage, right?
Right.
They're at that period where in the beginning, you have a $3,000 mortgage, $5 is going to principal, and $2,995 is going to interest, right?
Yeah.
That's a different ballgame, right?
I know that is discouraging
Yeah,
when
maybe
you first start paying.
right.
For
Maybe
sure.
a little escrow, like, oh, I paid for 5 years and I paid down $100. That doesn't really help me. But in the back half, right, that's when the majority of the payment goes to principal and much less to interest. Now, the escrow is going to stay the same. That's going to be built in there. That's your taxes and insurance, if I want to get technical, which I have to be. But you don't necessarily want to pay down because so little of your money is actually going to that payout. You don't want to take a big lump sum of money and use that to pay down a mortgage.
Yeah.
And we can talk more about that because it also depends on where the money comes from.
Yeah.
Are you completely risk averse? Is that money just going to stay in the bank, or is that money inside of an IRA or 401k?
Right.
We're going to have tax consequences of taking that money out. And that's something that we do cover quite a bit.
So folks out there that may be doing the real estate, maybe thinking about paying off the mortgage, they have questions, deeper questions about their individual plan.
Right.
What should they do right now, Ben?
Right. So I would say that anybody that's been listening, that any of this stuff impacts you. When you're thinking about renting, you're thinking about buying, you're thinking about being a landlord, come talk to me first, please. The number is 844-680-1709. And we offer a complimentary consultation. We offer a review of your retirement, right? So it's not just, hey, should I rent or buy? It's, when should I take my Social Security? Am I going to run out of money? How do I pay less in taxes? How do I maintain my lifestyle? Help us, figure this out. I feel like this is too complicated. I don't understand my plan. I've been with the same advisor for 35 years and I don't know if it's still the right plan for me or even if it makes sense. So, all those things are reasons that I would say give us a call and sit down with a member of our team and see what we can do to help you out. Thank you for watching. If you'd like to schedule a 15-minute phone call, go ahead and click the link in the description below, and we look forward to talking to you soon.